Okay, so good morning once again, everyone. No, so today we will be having our continued discussion for bonds payable. No, so I hope everyone is doing fine. No, we are almost done with our second half of the semester. So malapit na rin tayong matapos. So yun, I hope everyone is doing fine. No, continue working hard. Okay, so. Again, I decided to make this recorded video na lang, no, for us to have the flexibility in time to watch and understand the topic because yun nga, as what I have messaged you earlier, no, medyo may conflict tayo so that we cannot make our Google Meet session. So that's why I've decided na to make this recorded video na lang, no. Okay. So for today, basically what we are gonna do is to discuss certain exercises, no? These exercises were already given to you to your assignment, so I hope na this discussion can supplement to what you have already learned from answering your assignments. Okay? So let's begin. Okay? Um, wait, sige. So our first problem, okay? So we have this first illustration. Basically ito yung pinaka-basic na illustration natin dito. How do we journalize and analyze bonds payable transactions? Okay? So Supersonic Company was authorized to issue a 12% note, no? Sorry, 12% bonds with face amount of 7 million on April 1, 2020. Okay? The interest on the bonds is payable semi-annually on April 1 and October 1 of each year, and the bonds were sold on April 1. Okay, so yung authorization was done on April 1 and at the same time, it was also sold at 106. Okay? So the first thing that we need to know, di ba, when we talk about bonds, if you are given a certain price, like in this example, di ba? We have been given a price 106. Okay? This means percentage, correct? This means percentage. So that means if you have a bond with a face amount of 7 million and it was sold at 106, then basically the bonds were sold, okay? Were sold at 7 million multiplied by 106%, such that the purchase price or the selling or the issuance price of the bonds, we have 7 million multiplied by 106%. So that is 7,420,000. Okay? Nakuha ninyo yun? So, if we are to record this on April 1, 2020, our entry would be basically a debit to cash because yun nga, the issuance price, basically that is your cash received as the issuer of the bonds, okay? At 7,420,000. Di ba? So ngayon, the next thing that we need to do that compare the issue price versus the face amount, which in this case, we have 7 million. Okay? So, di ba may difference? In this particular example, that is 420,000. Di ba? Ngayon, if the issue price is higher versus your face amount, di ba? That is premium on bonds payable. Correct? Yeah. Review na lang ito, di ba? To what you have already learned. No? This is premium on bonds payable. Meaning, ang ibig sabihin lang yan is that the purchaser of the bonds, okay, yung bumili, yung na-issuehan ng bonds, is willing to pay an amount which is more than the amount borrowed. Because yun nga, di ba, bonds payable is basically a liability. In this particular transaction, okay, in this particular transaction, in essence, the company, which is Supersonic Company, borrowed 7 million, but in return, received 7,420,000. That is the easy way to understand it. Okay, that is the easy way to understand it. Um, the excess, okay, the excess, that is your premiums on bonds payable. Okay? So how do we record premium on bonds payable? Obviously, di ba, we have a corresponding credit here for the liability aspect of the transaction at 7 million. Again, the liability aspect is always recorded at face amount. Okay, remember that always. Okay? Always to be recorded at face amount. So ngayon, the difference, yun yung sinabi natin kanina na that is premiums on funds payable, which is 420,000. Okay? Now, as to the question of why we give premiums, well, there are many factors, no? There are many factors that can lead to a bond being issued at a premium. Maybe um uh borrowers or sorry, lenders or creditors are willing to purchase a bond at a premium because maybe the bond is paying at a high interest or the bond in the market is kumbaga possesses high demand value. Basic law, supply and demand. If the demand is high, then obviously if the demand is high and the supply is low, di ba? Mas mataas yung yung presyo. Okay? This is why some creditors, which in this case, yun nga, mga lenders, okay, yung purchaser ng bonds, the public in general, okay, um, are willing to purchase a bond at a premium. So this is how we are to record that, no? Na ang effect nito, any effect of a premium, okay? Any effect of a premium on the debtor's side or doon sa nangutang, this is, okay, remember this premium in general, that is a deduction to your total interest expense. Okay? That is a deduction to your total interest expense, which is why, diba, as noted, these premiums on bonds payable, these should be amortized regularly. In that the amortization of this, okay, the amortization of this is debited to your, no, sorry, not debit, but this is um, credited to your interest expense. Later on, makikita natin kung paano na natin to i-recognize yung amortization, di ba? That is why, sinabi natin na that is a deduction to your interest expense pag premiums. Okay? Also, as we all know na, not all bond transaction results to a premium. May discount din. Pag discount naman, the issue price, okay? The issue price is lower than your face amount. Okay? The issue price is lower than your face amount. So, example lang, it can be na um, the the issue price maybe if you have a face amount of 7 million, can be na 6,800,000 the issue price. Okay? So, if that is the case, then we will have um, 200,000 as your uh, discount on bonds payable instead of premium. Diba? Issuance at a discount. Okay. So ngayon, um, the same reason na bakit we are issuing bonds at a discount because maybe um, the the issuer of the bonds or the debtor, kumbaga, nahihirapan na kumuha ng funds. Kumbaga, in essence, mahirap ibenta yung bonds payable or yung bond. Kaya, uh, uh, binibenta niya at a lower price. The debtor is willing to receive an amount lower than what he or she or it may be paying. Okay, that is discount. Okay, that is discount on bonds payable. Okay, so continuing our illustration. Okay, so this is how we are to record our bonds payable. No? Noting na per instruction or per requirement, we are to use memorandum approach. Now, in accounting for bonds payable, okay, as noted, di ba, there are two methods on how we can account bonds payable. Diba? Using the memorandum entry method or the journal entry method. But we have to always remember that the distinction between the two lies only or initially, okay, the main difference basically lies in the recognition of your authorization of bonds payable issuance. Because yun nga, as the name suggests, using the memorandum approach, during the date of authorization, okay, we are only to make a memorandum entry signifying that we have been allowed or we have been authorized, okay, we have been authorized to issue bonds payable at this particular face amount with particular denomination, okay, particular interest, and particular interest payments. Memo, okay? However, if we are to use the journal entry approach, then we are to recognize the authorization. Okay? We are to recognize the authorization by making an entry na, okay, this is journal entry method ha. If we are to use the journal entry method, authorization by debiting unissued bonds, crediting authorized bonds. Okay? That is, no? But this is only on the date of authorization. Okay? Pag memo entry method naman, okay, pag memo entry method, we only make, obviously, memo entry. Okay? Memo entry lang na yun nga, as what we have stated kanina, that would signify, okay, that would signify the details of your authorized bond issue. Okay? So if there is actual issuance, okay, if there is actual issuance na, under the journal entry method, our entry would basically be to debit cash, credit, unissued bonds payable. Signifying na originally we have debited it DR tayo, naka-debit siya. Pag nag-issue na, credit. Okay? Credit na yan siya. Nabawasan na yung mga hindi na issue. That's basically what it means. Then debit or credit, premiums or discount. Okay? Debit or credit, premiums or discount. Ngayon, pag memo entry tayo, issuance, actual, debit cash, yung normal entry natin, credit, bonds, payable. Then credit, premiums on bonds. Huh? So that is basically the distinction between the two, no? Pag memo at journal entry method. So ngayon, yeah, commonly, per industry practice, memo entry method ang ginagamit because, yun nga, kung mapapansin ninyo, mas practical gamitin ang memo entry. Kasi itong journal entry method on the authorization of bond issuance, ah, medyo hindi naman siya komplikado, but medyo tedious lang in the sense na you need to recognize pa your unissued and then your authorized na during sa presentation, we need to present how much the authorized bonds payable less your unissued. So that would be your net bonds payable or meaning yung issued bonds payable. Diba? So, yan. So, yun lang yun. Okay, yun lang yun ang ah ah, ibig sabihin yan, di ba? So, okay. So continuing with our example, kasi yun nga, yung requirement sa atin is um, memo entry method, no? So, basically, debit cash tayo, credit bonds payable, credit premiums and bonds payable at 420. That is on April 1. Okay? Ngayon, wait, I just have to erase muna ha. Naglalog. Okay, continuing our example, this is April 1. Um, if we can also notice in the problem, okay, we can also notice, interests are paid April 1 and October 1. So this means na if we have issued the bonds on April 1, we are to pay interest on October 1, 2020. So if we are to count that, April, May, June, July, August, September. Because we cannot count October because the date to be paid is on the first day of the month. So hindi pa cover yung whole month. So that means the period would only be April 1, or meaning April 1 to 30, May 1 to 30, May 1 to 30, or sorry, 31, then June, July, August, and September. So that is 6 months. Huh? So the interest or the regular interest payment, okay, the regular interest payment, yung basis natin dyan would be the, can remember this, not the issue price, but the face amount. So that is 7 million times 12% times 6 divided by 12. 6 months divided by 12 months. Regular computation of interest. So that is times 6 divided by 12. So that is 420,000. Okay? So that is 420,000. So ngayon, to record that, we are to debit interest expense, okay? Credit cash, 420,000. Okay? Next, recognition. The amortization of our premiums. As noted, straight line method daw. So, medyo madali lang. Straight line method based on the term of the bond, which in this case, that is 10 years. Diba? So, the annual, okay, the annual amortization of your premiums in this particular case, we have 420 divided by 10. So that is 42,000. But we have to remember this is per year. This is per year. So ngayon, and that the cover period was only 6 months, di ba? Based on our counting. Okay, that was only 6 months. So again, times 6 divided by 12. So basically, that is 21,000. So again, how do we record this? Pag premium that is charged against your interest expense. Kasi nga, if kung papansinin natin ito, when we talk about amortization, di ba? That means we are to or reduce a particular account, amortize, na, regularly. So pag i-reduce natin yan, kung naka-credit yan siya, obviously, yung entry natin is a debit. Okay? Yung charging or the corresponding credit would be interest expense. Kaya, sinabi natin kanina na premiums is a deduction to your interest expense. Now, if we are to be asked, what is the interest expense on October 1, 2020. That is 420,000 minus 21,399. Kuha yun na. Kasi nga, net. Okay? But if we are to be asked, what is the interest expense based on the face amount? Then that is 420,000. The total interest expense lang, that is 399. Okay? So, now, another point that I would like to make, no? Because if you may notice also, okay, if you may notice, um, the next transaction that could possibly occur on this particular bond would be on October 1, di ba? October 1. So that is, um, if we are to make that as an entry again, I know, we are October 1 pala, sorry. The next is on April 1, di ba? The next, that is on April 1. So that would basically mean na April 1 next year, so April 1, 2021. But we have to remember again, basics of your adjusting entry. The reporting year is December 2020. Diba? And that October, November, December, we have already earned interest. Correct? We have already earned, oh sorry, not earned, incur. We have already incurred interest. And that, ma-recognize pa yan siya if we do not make any adjustments, we can recognize or we will recognize without adjustment on April 1. Ah, that is why it is very vital that we make adjustments on December 31, 2020. Because if we will not make any adjustments or adjusting entry, then the interest expense in 2020 would be understated. Because, yun nga, if no adjustments are made, then the interest would be recognized in 2021, which is erroneous because on October, November, and December, we have already incurred interest in 2020. Diba? Yun yung concept. So we need to make adjustment. So again, that is 3 months, diba? So to compute that, again, 7 million times 12% times 3 divided by 12. Okay? 7 million times 12 times 3 divided by 12. So that is 210,000. Right? That is 210,000. So how are we going to make that entry? Debit, interest, expense, credit, interest, payable. 210,000. Okay? Okay? So, this is basically the adjustment. Recognize the interest expense with the interest payable. Okay? And also, we need to continue amortizing the premiums. Okay? Which in this case, yun nga, di ba, 3 months lang, um, we have 420,000 divided by 10 times 3 divided by 12. So that is 42,000 times 3 divided by 12. Kasi yun nga, 3 months lang. October, November, December. So 42,000 times 3 divided by 12. So that is 10,500. So again, yung entry natin, December 31, 2020, we have uh, debit on premiums on bonds payable, credit, interest, expense at 10,500. Okay? Now, as to presentation ito, just erase. Um, as to presentation, okay, on if we are to be asked, how should this be presented on 12/31/2020? We are to present this in the balance sheet as bonds payable 7 billion, add your premiums on PP. But we have to remember that if we have started, okay, if we have started at 420,000, then we have already amortized, yeah, on October 1, 21,000 and 10,500 on December 31, di ba? So, the premiums on our bonds payable now is only 409,500. Okay? So, 7 million plus 409,500. So that the carrying amount, okay, remember this, the terms used, carrying amount. The carrying amount of the bonds would now be 7,409,500. Okay? Diba we started with carrying amount of 7,420. So, diba? That is the carrying amount on April 1. At the end of the year, December 31, the carrying amount is now 7,409,500. Okay? The next entry, wait. Next entry would be April 1, 2021 na. Diba? April 1, 2021. So, regular entry na lang tayo na interest expense. But on April 1, the interest expense is only 3 months, not 6. Why? Because on December 31, 2020, we have already recognized the half of it. But the cash payment is 6 months. So how are we going to recognize that? interest expense, 210. Debit, interest, payable, 210. Credit, cash, 420. Very easy. Next is your amortization of premiums. So, premiums on bonds payable. Okay. Credit, interest, expense. At again, 3 months lang. Okay, because we have already recognized the 3 months on December 31. So that is 10,500. Okay. So again, if we are to be asked, what is the interest expense on April 1? 210 less 10,500. Okay. Now, on October 1, 2021, regular entry na debit, interest expense, credit cash, 420, kasi wala namang changes yan. Debit, premium on bonds, premium on bonds payable, credit, interest, expense. Okay, credit interest expense na 21,000. Okay? And then, again, adjustment na naman. On 12/31/2021, same lang kasi medyo walang ang changes. Debit, interest, expense, credit, interest, payable na 210,000. And then, for your premium, okay, premium on bonds payable, credit, interest, expense, 10,500. Okay? Balik-balik lang siya talaga until its maturity after 10 years. Diba? As to presentation naman, on your balance sheet, again, bonds payable to be presented at 7 million face amount. Add your premium on bonds payable, which in this case, we started with 420, amortized on April 1, 2020, October 1, 2020 na 21,000, on December, 10,500, on April 1, 2021, 10,500 again, October 1, 2021, 21,000, okay. um, December, April 1, 2021, October 2021, and December 2021. So the net or the remaining premium bonds payable as of December 2021 is now 420 minus 21 minus 10,500 minus 10,500 minus 21 minus 10. So we have 346,500. The carrying amount now, okay, we have 7,346,500. Okay? So that is for your problem 1. Diba? Medyo madali lang actually yung bonds payable, no? Okay? Just understand the basics, no? Talagang makukuha, especially computations of interest expense, amortization of premiums, which in this case, medyo madali pa because yun nga, most of our exercises here focuses on the uh, straight line method pa. So, medyo madali. Magiging komplikado lang ito later on if we are to use the uh, effective interest method, which we will deal later. Okay? So, yun. Let us, so let's continue. Okay? Um, so let's continue. So for our next problem, we have this Marble company, no? So this particular problem involves bond issue costs. Okay? So, sa brief background lang din, although I know now we have already know about this, no? Bond issue costs, okay? These are direct attributable costs, okay? Related in relation to your bond issuance such that example is legal fees, underwriter fees, okay? So these are direct attributable costs to your bond issuance. So the treatment for bond issue costs, no, we have to remember this. This is a deduction to your premiums on bonds payable, or if the bond issue is on a discount, okay, it is an addition, okay, addition to discount on bonds payable. So we have to, okay, we have to remember this, ha. So this is a uh, deduction to your premiums on bonds payable, or this is an addition to your discount. So kumbaga, nagpalabas tayo ng pera to pay, no? To pay the bond issue cost, then basically if we are to issue it at a discount, then kumbaga additional expense, no? Or premium, additional expense siya chargeable to your premium. Okay? Chargeable to your premium. Um uh for transactions or for bond issuance considered at fair value, because we also have this uh bonds payable recognized at fair value. Okay, remember this. At fair value. Then bond issue cost. Okay, bond issue cost. This is a direct expense. Okay? Meaning, pag sinabi natin na direct expense siya, transaction cost yung account na gagamitin. Not a deduction to your premium or an addition to your discount. Because basically, pag ang bonds payable is classified at fair value, no premium or discount is to be recorded. Klaro yun, ha? No premium or discount is to be recorded because we are to measure a bonds payable or if it is issued at fair value, then the bonds payable is to be measured at fair value na. Okay? Not at face amount. Klaro? So, with that, so let's say we have this transaction. Okay, we have this transaction. So on April 1, okay, April 1, 2020, a face amount of bonds amounting to 5 million was sold at 98%. So obviously this is discount, di ba? So that is 5 million times 0.98. So we have 4,900,000. Okay? Plus the bond issue cost of 50,000. The net cash to be received by this bond issuance, we have 4,850,000. Okay? So if we are to record that, cash 4,850,000, bonds payable at 5 million, then discount on bonds payable, we have 150,000. Okay? Continuing with our illustration, interest to be paid April and October 1. So the next entry would be on October 1, 2020, which um, interest, basically that is 5 million, interest of 12%. So that is 600,000. So again, April to October 1, that is 6 months. Yeah. So we have 300,000. No? Debit, interest, expense, credit, cash, 300,000. Yeah. For the amortization of discount, because as noted, straight line pa rin tayo. So we have the discount, we have 150,000. If the bond should mature on April 1, 2025, then we have issued it on April 1, 2020. So that is 2020, 21, 22, 23, 24. So that is for 5 years. Now, note lang, if we are to count this, if we are to include the first year, do not include the last year. So in this case, if I am to count this, if I include 2020, because that is the first year, di ba? April 1, 2020. So 2020, 2021, 22, 23, 24. Do not include the last year. Or if we are to include the last year, then do not include the first year. Di ba? That is how we count for terms. So 21, 22, 23, 24, 25. Okay? So that is how we count, no? So typically that is 5 years. So 150 divided by 5 years, we have 30,000 per year. Okay, we have 30,000 per year. Then, again, because that is only for 6 months, times 6 divided by 12, so we have 15,000. So notice, discount tayo ngayon. Again, this is an addition to your interest expense. So debit, interest expense, credit, discount on bonds payable, 15,000. So again, why we have credited it? Again, naka-debit yung discounts natin dito. So obviously, if we are to amortize, that is to be credited. Diba? Then next, on 12/31/2020, again, adjustment, debit, interest, expense, credit, interest, payable. Diba? Now, that is for 3 months, October, November, December. 3 months. So, that is 150,000 obviously. So, 300,000 divided by 2. Because yun nga, 6 months itong 300,000 natin. So, for 3 months, obviously, that is divide 2 lang para mas madali, di ba? Then, your amortization, interest, expense, credit, discount on bonds payable na 7,500. So, madali lang. Okay? Ngayon, next entry natin, April 1, 2021. Regular entry. Interest, expense, credit, cash at 300,000. Amortization on, sorry. Wait. Mali tayo. Interest expense, again, kalahati lang because we have already accrued that on December 31, 2020. Debit, interest payable at 150, credit cash 300,000. Okay? Then amortization, interest, expense, credit, discount on bonds payable. Again, that is for 3 months because we have already recognized December. Okay? Now, on July 1, we have retired advance payable amounting to 2 million. When we say retired class, we have fully paid it. Meaning, pinayaran natin, we reacquire without the intention of reissuing. Because may mga transaction din kasi dito na although we have reacquired it, but because hindi pa nga siya naglap sa kanyang maturity, because as we notice, no, if we notice, the maturity of this bond issue still would be on April 1, 2025. Di ba? April 1, 2025. So if we have reacquired it in July 1, we still have the, what you call this, the prerogative na to reissue this. But in this case, because it is specifically stated na it was retired on July 1, then we do not have the intention to reissue. Okay? So ngayon, the procedure here is number 1, let us determine the issue price, which the issue price, that is 99. Yeah? That is 99. Again, in essence, equivalent to 99%. So the issue price, 2 million times 99%. So 2 million times 99%. So we have 1,980,000. Not the issue price, sorry. Wrong term. But rather, retirement price. Now, In retirement, okay, in retirement, we have to look, no, kung kailan ba nangyari ang retirement. Because we have to note na if there are any accrued interest na kailangan bayaran, okay, prior to the retirement, we need to pay it. Okay, we need to pay it. That is why if we are to 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 look at it closely, the total cash outlay of a retirement should include, number one, the retirement price plus any accrued interest. Remember that, ha? Retirement price plus any accrued interest. Okay? So ngayon, based on this illustration, July 1, 2021 nangyari yung retirement. Tapos the last payment of interest happened on kailan? Kailan yung last accrual natin? April 1, 2021. Correct? So that means from April 1, 2021 to June 30, 2021, we have an interest payable that needs to be paid. Okay, that needs to be paid, or meaning needs to be, or we have an accrued interest that needs to be paid. So that is from April 2021, May 2021, and June 2021. So that is for 3 months. So again, the 3 months interest natin, di ba, that is 150,000. Kuha ninyo? That is 150,000. So that is the point. Retirement price plus accrued interest of 150, the total cash outlay for this retirement, we have 2,130,000. Okay, we have 2,130,000. So how are we going to recognize this as an entry? Okay. Number one, we have to debit bonds payable because yun nga, we have retired at 2 million. Okay? And then, we have to credit discount because tatanggalin na natin yung discount if there are any because we are to retire the particular bonds pertaining to that discount. Which in this case, we need to compute. Wait, sorry, may mali. The accrued interest pala here is not 150. Sorry ha, let me correct ha. That is not 150 because yun nga, not all amount was retired. Okay, let me correct. 2 million lang pala. So, let's compute. 2 million times 12%. So that is times 3 divided by 12. So we have 60,000. Okay. So the total cash outlay here, not that amount, but 60,000 plus 1,980. So we have 2,040,000. So that is the total cash outlay of 2,040,000. Okay. And then, wait, interest expense pertaining to the accrual, we have to debit that at 60. Ngayon, let's compute for the discount. How much was the remaining discount? So, pertaining to the 2 million. Huh? So, ayun, um, Di ba originally, our discount was, ano ngayon? 150,000. Diba? But yun nga, that pertains to 5 million. So, ngayon, if we are to compute how much is the applicable discount for the 2 million, ratio na lang natin para mas madali, di ba? 2 million over 5 million times 150,000. Diba? So, mas madali. 2 million divided by 5 million times 150,000, we have 60,000 discount applicable to 2 million. Now, out of this discount, okay, out of this discount na 2 million, na 60,000 rather, meron nang na-amortize dyan. Diba? Like, on October 1, 2020, may 15,000 na na-amortize. On December 31, 2020, may 7,500. On April 1, 2021, meron na again 7,500. For a total amortization of 30,000. Diba? 15 plus 7,500 plus 7,500. So that is 30,000. Diba? Again, this 30,000 amortized discount applicable to your 5 million. Correct? So if we are to get the applicable amount or the amount applicable to 2 million, para mas madali na naman, ratio na lang natin. Okay? Times 30,000. So that is 2 million divided by 5,000 times 12,000. So anong ibig sabihin yan? Out of the 60,000 na applicable discount for 2 million, 12,000 has already been amortized. So that means na the 48,000, okay, this is your remaining balance, okay, that is the remaining balance of the discount, okay, applicable to the 2 million. Okay? Applicable to the 2 million. So ngayon, we have to remove it. Okay, we have to remove it. Okay? So, again, no, we have to remove the applicable discount for uh, the particular 2 million amount retired, no, bonds payable. Ngayon, if we are to look at this, di ba this balance siya, no? Total ito 2 million 60, then ito 2 million 88. Di ba? That is this balance now. The final computation that we need to get, no, is to determine how much is the gain or loss on retirement. Okay? How much is the gain or loss on retirement? So ngayon, how are we going or what is or how are we going to compute that? that is basically computed lang as retirement price, okay, less carrying amount, okay? Again, remember ha, retirement price, not the total cash outlay. So in this particular example, our retirement price, di ba, we have 1,980,000 because 2,040,000, that is a total cash outlay, no? Retirement price, 1,980,000, diba? Now, the carrying amount, we can easily compute it. Diba? 2 million face amount, diba? Less the discount na applicable, which in this case, that was 48 or that is 48,000, diba? Or if for or if kung premium siya, add the premium, diba? But in this case, because this is discount, we will deduct. So the carrying amount, okay, the carrying amount, we have 2 million minus 48. So that is 19 or 1,952. Huh? Deduct that, we have a difference of 28,000. Now, how are we going to determine if this is gain or loss on retirement? Ganito. Let us think na yung carrying amount, ito yung utang. Okay? Ito yung utang na dapat natin bayaran. And ang retirement price is magkano yung binayad. Okay? Remember that ha? Magkano yung binayad natin. So, in that sense ngayon, if we have a carrying amount or if we have an utang amounting to 1,952,000, tapos yung binayad natin is 1,980,000, obviously, that is loss on retirement. Kasi nga, yung utang natin, 1,952 lang, pero yung binayad natin is 1,980,000. So that is loss on retirement. Kung may utang ka na piso, tapos binayad mo is dos, obviously, nalugi ka. Di ba? Loss on retirement. Pero assuming, baliktad yung situation, yung carrying amount or yung utang natin is 1,980, tapos yung binayad natin is 1,952. Obviously, that is gain on retirement. May utang ka na dos, yung binayad mo, piso. That is gain. But in this particular case, we have a loss. So our entry for this, debit, loss on retirement of 28,000. So that is how we are to record the retirement on July 1. Okay? So, ngayon, next entry natin dito would be, wait, on October 1, 2021. Okay? But this will only pertain na to the 3 million only because we have already retired the 2 million. So, typical entry, interest expense, credit cash, ha? Um, 3 million times 12%. So, di ba yung last payment natin was April? So, again, that is 6 months, no? So, we have 1 million, sorry, 3 million times 12% times 6 divided by 12, 180,000 na lang. And then, for the amortization of discount, um, applicable for the 3 million only na lang din, di ba? So, kumbaga, wait, ano nga yung kuha natin? Um, Maybe 60,000 yun. So, that means na, so, to make the amortization ngayon for the discount on the remaining 3 million, di ba, again, we started with 150,000, di ba? So, ano yun? Di ba? Started with 150,000. And that, um, 60,000 of this, di ba? Applicable to the retired amount, correct? Na? Total, so we need to get the 60,000 from the 150. So that means 90,000 that is applicable for the remaining 3 million discount. Diba? Divided, divided divide that by 5 years. So the revised applicable amortization per year now, that is 90,000 divided by 5 or 18,000 per year. Correct? And on October 1, that is, kumbaga, 6 months pa rin. Times 6 divided by 12, obviously that is 9,000. So the amortization now is 9,000. Okay, nakuha ninyo yon. Okay? So ngayon, on December 31, 2021, adjustment, ha? So, interest expense, credit, interest payable. Again, for 3 months, October, November, December. That is 90,000, no? Kalahati lang yan. Di ba? Kalahati sa 180. And then, the discount na naman. interest expense credit discount on bonds payable, which is again kalahati nito 4,500. Now, as to presentation, okay? Obviously, presentation sa balance sheet, face amount natin, we only have 3 million. And the discount, okay, applicable to the 3 million, we started with, wait, we started with 90,000, di ba? Kasi 90,000 lang yung remaining balance natin dyan. Okay? And we have already have, or we already have amortized it on October, di ba? Which is ito, 15,000. But again, on the applicable amortization on October 1, di ba? That is 15,000. The 15,000 there is applicable for the whole 5 million. But, again, as noted natin kanina, 3 million lang dyan. Ha? So, 3 million times 15,000 already amortized. On December 31, 2020, we have amortized 7.5. But again, applicable dyan, that is only for the 3 million. So, 4,500. Diba? Paano natin kinuha yan siya? 3,000 divided by 5,000 times. Okay? Next is on April 1, 2021. Again, 7.5 yun. Diba? So obviously, applicable sa 3 million, that is only 4,500. And next, October 1, 2021, which is ito, we have amortized 9,000. And lastly, on 12/31/2021, we have amortized 4,500. So the remaining balance of the discount on bonds payable or the unamortized discount on bonds payable, we have 90,000 minus 9,000 minus 4,500 minus 4,500 minus 9,000 minus, we have 58,500. So, wait. 3 million minus 58.5, we have this 2,941,500. This is your carrying amount on December 31, 2021. Okay? So, yun. So that is for this problem, no? Medyo na-complicate lang siya because of the retirement, but again, if you know your basics, medyo madali na lang siya actually, no? So be familiarized with the concepts. Okay, be familiarized with the concepts. Okay. So let's continue with another illustration. Okay. Like a company issued 12% bonds with face amount of 4 million for 4.2. Obviously, 4 million yung face amount issued for 4,200,000. So this is issuance of bonds with a what you call this premium. Interest payable annually, December 31, and the bonds mature on 2025. So from 2020, 21, 22, 23, 24. Okay. I included the first year, so I exclude the last year. So that is 5 years. Gusto nyo, 22, 23, 24. Wait. 21, 22, 23, 24, 25. 5 years. Exclude the first year, include the last year. That is how we count the terms. Diba? On the same bonds with face amount of redeemed at 95. So meaning, redemption is the same with retirement. No? Binayaran mo. Kinuha na yung bonds or meaning yung holder ng bond certificate is present na sa'yo. Sige, bayaran mo na ako. That is redemption. So, let's make the entry. Okay? First entry, June 1, 2020. Okay? Sorry, January 1, 2020, not June 1. So, we receive cash, 4,200,000, bonds payable of 4 million, then premiums on bonds payable 200,000. Okay? Ngayon, 12/31/2020, okay? So, before we continue class, let's try to make a schedule na lang para mas madali, no? For us to organize na rin our answers for this, no? Let's make a schedule. Okay? So, okay. 01/2020. Okay. So 2020. Principal payment, then interest, when we NR or nominal rate, or okay, wait. Interest expense based on nominal rate or face amount. Then amortization, meaning sa amortization natin dito, premium or discount. Then carrying total lagyan na lang natin na saglit lang. Let's make a schedule na lang, no? Para mas madali siya. So, this is our first entry, no? That is our first entry, January 1, 2020. So let's make a schedule na lang. Okay? So this is your date, 01, 2020. Ngayon, let's start with principal payment. Okay, that is principal payment. Interest expense based on face amount or nominal rate. Then this is our amortization. So either discount or premium. Okay, either discount or premium. Then total interest. So when you say total interest, that is interest expense based on face amount plus the amortization of your discount and premium, di ba? Based on our entry. And then we have the carrying amount. Okay? Ngayon, on January 1, 2020, obviously, our carrying amount is 4,200,000. Diba? Face amount plus the premium. Ngayon, 12/31, 2020, that is the first payment of interest and amortization. Diba? So, we have an interest of 12%. So, ngayon, 4 million times 12%. Diba? Wait. So we have 480,000. So that is your interest expense. Now, your premium amortization, which is, di ba, 200,000 yan siya. That is to be divided by 5 years. So, 200,000 divided by 5. So, we have 40,000. Okay. Annual amortization. So, pag premium, di ba? Nga, premium to. Minus, pag discount, add. So the total interest expense on December 31, 2020 or as of December 31, 2020, that is 440,000. Deduct kasi nga premium. Okay? And ang effect niyan per hour carrying amount, di ba? So, di ba our premium here is 200,000, okay? And then the principal balance or the face amount, we have 4 million. That's why it became 4.2. Huh? So, ang effect nito ngayon, the premium, okay, the premium as of December 31, 2020, that is obviously 160,000 na lang. Diba? Plus your 4 million na face amount, we have 4,160,000 na carrying amount. Correct? Diba? But to easily compute that, para hindi tayo masyadong malito, and applying this schedule, pag premium, deduct, okay, deduct your amortized premium, okay? Deduct your amortized premium from your carrying amount. So if we deduct that, obviously that is 4,160,000. Diba? Simple lang. So by looking at this, okay, by looking at this, the total interest, klaro na, 440. And the carrying amount, we have 4160, which is this amount should be presented in your balance sheet. No, mas madali, no? But take note, deduction lang to if premium, di ba? Applying the same concepts for discounts and premium. So pag discount to, obviously this is addition. So, pagdating sa carrying amount, hindi yan siya i-deduct, i-add. Wa? Okay. So ngayon, on December 31, 2020 rin, okay? Kuha na lang tayo dito another para hindi masyadong malito, no? Merong redemption, okay, of a bond with face amount of 1 million. So ngayon, obviously, may principal payment na 1 million. But, take note, it was redeemed at 95%. So the point is, 1 million times 95%, okay, ito yung redemption price. Okay, 950,000. So, with this ngayon, okay, number one, we need to identify na how much of the remaining premium or discount applicable sa 1 million. That is number one. Diba? And then number two, we need to compute for the gain or loss on redemption or retirement. Huh? Number three, we need to know if there are any accrued interest or if there are any accrued interest, which in this case, wala. Kasi same year yung or same date yung payment. Diba? So, nagbayad tayo ng 400. So, walang, kumbaga, accrued interest. So, with this, okay, with this, let's compute now for the gain or loss on redemption or retirement. So, again, redemption price now 950,000 versus your carrying amount, which in this case, we need to compute. We have to remember na yung remaining balance natin sa premium, that is 160,000 na lang, di ba? And magkano dyan yung applicable sa 1 million? So again, para mas madali, let's ratio. Ha? So 1 million, okay? Divide 4,000 yung original, di ba? Times 160,000. So out of this 160,000, 40,000 na lang yung or 40,000 is the applicable for the 1 million face amount redeem. So, for your carrying amount, we have a face amount of 1 million. Then you have your premium amounting to 40,000. Yeah? No, not that. That is addition. We have 1,040,000 carrying or carrying amount. Huh? So 1,040,000. So again, to understand this, may utang tayo na 1,040,000 pero binayaran natin ng 950. The difference, we have 90,000. So anong tawag dito sa 90,000? This is your what? Gain on redemption. Diba? Nagbayad tayo ng 950 where in fact yung utang natin is 1,040,000. So gain on redemption. Now, To recognize that, sa journal entry natin on 12/31/2020, debit bonds payable of 1 million. No? Then, debit premiums on bonds payable, which is itong 40,000. Credit cash applicable to your redemption price of 950 and credit gain on redemption na 90,000. Ha? This is your entry on redemption. Kuha. Now, however, nakaligtaan natin kanina, again, prior this entry ha, we need to make entry for this, nakalimutan natin. So, the entry for that, on 12/31/2020, debit, interest, expense, credit, cash. Magkano yon? 480,000. Okay? Then, your premium, amortization, premium on bonds payable, credit, interest, expense. Ano? 40,000. Okay? Yun. That is in 2020. Now, based on this, um, based on this table ngayon class, let's continue, no? So, again, yung tinanggal natin na premiums dito, that is only 40,000, di ba? So, ang nangyari ngayon dito, the remaining carrying amount, okay, the remaining carrying amount on December 31, 2020 is 4,160,000. Okay? Minus 1 million because yun nga, may payment na tayo na 1 million. Okay? Minus the 40. Okay? So, 4,160 minus 1 million redeem minus the tinanggal natin dito. So, we have 3,120,000. Okay? So, ngayon, if we are to continue this, on December 31, 2021, no payment sa principal kasi wala nga. But, as to sa interest expense, the basis would now be 3 million times 12%. So, 3 million times 12%. So, we have 360,000. Huh? The amortization of your principal ngayon, of your premium, magkano na lang yung natirang premiums natin? So, we have 200 minus 40 minus 40 minus 40 minus 40. So, we have 120,000, di ba? So, 120,000 na lang yung remaining. Now, let's divide that into how many remaining years for 2021 or after December 31, 2020 pala? 4. Diba? 1 year lang yung na-amortize natin. So, we have 4 years. So, divided by 4, obviously, we have 30,000. Okay? So, 3,120 minus 30, we have 3,090,000. Okay? So, ngayon, if we are to journalize that, 12/31/2021, debit, interest expense, credit, cash. At, ano yun? 360. Then, debit premiums on bonds payable, credit, interest, expense, 30,000. Now, if we are to present that in the financial statements, the carrying amount of the bonds payable is 3,090,000. So, check that. Kung 3,090,000 nga, di ba we started with 200 premiums, minus 40, the initial amortization, minus 40, the redemption, then the second amortization. 90,000 is the remaining balance of our premiums payable as of December 31, 2021. Plus the face amount of 3 million, 3,090,000 nga. Di ba? Now, assuming class we are to continue this after, up to December 31, 2024. So, let's continue this. Para ma-appreciate lang natin, uh, ma-appreciate lang natin itong table. Okay? Paano ito gagamitin? Wait lang muna ha. We'll erase. Okay. Para ma-appreciate lang natin. So, 2022. In 2022, obviously, kasi nga wala pang payment. So, that is still 360. And this is still 30,000. Correct? Wala. No changes. So, 3,060,000. Diba? That is 3,060,000. In 12/31/2023, again, this is still 360, no changes. This is still 30,000. So that is 3,030,000. On 12/31/2024, last year, last interest payment natin, di ba? Kasi this will be paid on January 1, 2025 na. 360,000, 30, and then the carrying amount is now 3 million, di ba? Correct? Now, on January 1, 2025, the year of payment, meron na tayong principal payment of 3 million, assuming no no other transactions affecting this particular sample, no? And that, obviously, wala na interest payment, wala na ring amortization because it is now fully exhausted, di ba? So, check if it is fully exhausted. 200,000 minus 40, minus 40,000, minus 30,000, minus 30, minus 30. Wait. 200 minus 40, minus 40, minus 30, minus 30, minus 30, minus 30. Di ba? 0. Ngayon, di ba payment to? So that means, equal na yan siya sa carrying amount natin. Di ba? Such that, na per table, on January 1, 2025, 0 na yung balance ng carrying amount because it signifies na mayroon ng payment sa principal. Diba? Mas, kumbaga, mas hindi nakakalito if you use the table. So that is the essence of this table, no? Okay? 0 for the payment. Okay? So that is for your for this example. Um, we'll end this video muna. Then we'll continue later on kasi medyo mahaba na siya. We'll continue with the other examples in the next video. So see you in the next video, class.